I know some of you are probably feeling a little bit down with the price action currently plaguing the cryptocurrency space, but I'm here to tell you that this is unfortunately just part of being an altcoin investor. And the space as a whole is very much still in its infancy in regards to its trajectory. And today we're going to be talking about Hedera Hashgraph, my largest position in the cryptocurrency space, one of my favorite cryptocurrency projects, and how it's addressing a market in the market cap of quadrillions of dollars. And you don't just need to take my word for it. What we're going to be doing to kick things off is we're going to be playing a clip from Merkle Science. Now, they hosted a panel that was here in the UK, and Merkle Science are partners with the UK's Financial Conduct Authority. And they themselves say very clearly that the real-world asset market that is going to be revolutionized fundamentally by distributed ledger technologies. In fact, Hedera is already doing that, is worth quadrillions of dollars. Let's dive into this clip before we go through everything else.
We've got a really great panel here of people with different experience, but the main thing I would like to really ask you to focus on is not the crypto word. And the reason for that is, as some of you know, I call it a rounding error. It's about 4 trillion. And actually the much bigger opportunity, and I think a much bigger opportunity for Merkle and Riggs, we were talking about it earlier on, is actually what everyone calls real world assets. I would forget real world assets, just look at the derivative market. It's 1.2 quadrillion. And we've got a few Americans in the offing, so I can't resist it. If you're an American, put your hand up, please. Right. How many zeros in a quadrillion? How many zeros asked? 12? 18? So you can't even agree amongst yourselves. We think it's 24. Now, the reason I mention that is we used to argue about trillions and billions, but it's a lot of noughts. And so when we talk about 4 trillion as opposed to 1.2 quadrillion, and then stick in the funds and the bonds and real estate, and I'm just going to completely ignore data and information. Talking to Shell, what they're doing in Amsterdam, just staggering how they're using the technology. But the biggest tokenizer in the world is which company, before I start the panel? Nope. You all have one in your wallet or your purse or your phone, I suspect. Visa. Everything you do, they're tokenized. So this isn't new technology, but we are going to have to learn how to control and manage our exposure to this. And that's what, obviously, Merkle, and that's the whole object of today, is to start thinking and taking, unfortunately, responsibility.
The addressable market that not only can but likely will be tokenized is in the quadrillions. You talk about derivatives alone, they're a potentially quadrillion-dollar asset class on their own, let alone the hundreds of trillions in, for example, I think the stock market globally might be about 120 trillion. You talk about the bond markets globally, you talk about the currency markets globally, you talk about real estate, so on and so forth. And I think that what we're witnessing is a kind of unlock. We're going from paper to digital to crypto in regards to how the financial system operates. And I think Hedera is going to play a pretty big role in all of this. In fact, I think it's extremely well positioned to do so, for some of the reasons that we speak about regularly on this channel, like its governing council, like the fact that its validator set doesn't extract value. There's a kind of fair throughput. There's no kind of unfair ordering. All the validators are unsanctioned, essentially global leaders in their respective sectors. There's a fixed fee model. There's a scalability that can address this size. And what I want to do is actually dive over to a clip of Greg Bell, the Chief Business Officer over at the HBAR Foundation, or the Hedera Foundation, giving a bit of a kind of nod to some of these points. And then I'm going to show you this report here. And this came out this year. It's essentially the case for collateral mobility in Europe and the UK using tokenized money market funds. And we know that certainly here in the UK, as far as I'm aware, the only individuals that are actually live doing this are Aberdeen, Archax, and Lloyds, and of course they're using Hedera to do so, giving me further confidence to what I said at the start, and that is that Hedera is potentially addressing a $250 market cap problem. And I think we have all the evidence that we need. Let's dive into what Greg Bell has to say.
Well, that's where you have hedge funds that have the focus or strategy specifically for maximum extractable value. Yep. Another feature that doesn't exist within Hedera because it's not a good feature, right? Yep. Hedera is built for global finance. To enable front running within the underlying protocol itself is a terrible idea. And I think that there will be, that doesn't position it a network or a technology stack well for the adoption of existing financial products, because front running is illegal activity in most regulated markets, and you're embedding it directly within the settlement infrastructure. It's just not good. So this is where the governance model and the benefit of having investment banks like Nomura and asset managers like Aberdeen on the governing council of Hedera is not just that these are huge institutions and they're Fortune 500s and they're running the infrastructure and enabling that uptime and scalability enterprise grade, but it's also the foresight to think about how you structure a technology that can actually absorb the needs of a global financial system. And that's also true with the blockchain industry. What we saw was that not all protocols were unscathed by this event. Hedera was unscathed. It's a testament to the structure of Hedera being as decentralized in terms of the infrastructure on all continents, excluding Antarctica, on hardware and service providers, in industry distribution. It is very thoughtful. The way that the governing council operates. When people think about the governing council as sort of those that govern, yes, they do make decisions around the network, but they also physically are operating hardware. And that is unique. We saw a variety of layer twos that went down. That's unfortunate, of course. Sandeep from Polygon made headlines the other day, and he actually called out Hedera, and he called saying that Hedera as a layer one was valued higher than Polygon and Arbitrum and Optimism and Scroll combined. And these all happen to be the same networks that had outages, including Base and Lena, and largely due to the centralized exposure to individual platforms. And so you can have thousands of nodes, but to assume that thousands of nodes actually results in the improved performance and decentralization of a network is false if they all exist on common platforms. And in most cases, AWS as a cloud service provider actually wasn't even the number one cloud provider. There are other cloud providers that if they had gone would have had far worse outcomes for the outages across these networks. So, you can see where unfortunate events can actually drive the differentiation between various chains and what enterprise grade really means, what the value is in robust, redundant, distributed networks like Hedera that, you don't have to sacrifice performance for decentralization.
I think when Paul Atkins, who's obviously over at the SEC now, said there's a new era for financial markets underway, this is exactly what he's talking about. Financial assets are going from being sent via the postal service to email. And actually far more than that. That doesn't even do it justice. You're creating entirely new...
Yes, it's logic-based email. And I had a closed-door meeting with him not so long ago, and he's very much a forward thinker and understanding where this technology is headed, and similarly concerned around the risks that technology can pose to the financial system. And so whether that's the centralization as it relates to what we discussed earlier with the AWS outage, or ensuring that there is client and investor protections in place, and that's where Hedera really has thought a lot about a lot of these risks.
Of course, we were lucky enough to have Greg Bell on. Great guy, by the way. Do go and check that interview out. There's a link in the description. One of the best Hedera interviews I've seen on the whole of the web. There was this, and this was released by Owen Era, Ernst & Young, Hogan Lovells, and the Global Digital Financial Group. And you can see the timing. This is essentially all about, and I'll just skim through this, tokenized money market funds and how they can be used and utilized. You can see this is the working group and sandbox participants. Look at some of the names here. You've got Citi, you've got Deutsche Bank, you've got Euroclear, you've got Ernst & Young, you've got Fidelity, you've got Finality, you've got Goldman Sachs. So on and so forth. JP Morgan, Moody's, Lloyd's. I can go on and on and on. And then, of course, if you look at the layer ones over here, Hedera is highlighted as one of the few. And actually, if we scroll all the way down to page 41, where it starts to talk about how these things have been practically implemented, you can see they give some examples. And Hedera is the only DLT that is actually given twice in the case of State Street Global Advisory Europe Limited. The funds that they've tokenized, how they've done that through Archak. Shout out to Graham. His team is doing a sensational job. The fact that this is done on Hedera and what this is to do with. And then you also have BlackRock Asset Management's funds also tokenized. And they're certainly mentioned throughout this article more times than really anybody. And it's because they are simply doing the most, I believe. You look here, here's a quick illustration of this kind of ecosystem in the sandbox. You can see Hedera is amongst the kind of, I think there's only two other, Polygon, Hedera, and Ethereum. And of course, Stellar, of course. But there's only kind of 4 public blockchains that actually took part, and Hedera is one. And we see Hedera all over the place. It's only really starting to get recognized for its tokenization of real-world assets. It hasn't yet been, well, there hasn't yet been a kind of chart put on realworldassets.xyu. But they are starting to recognize it, and you can see some of these funds here that are on there from State Street, from Fidelity, from the Australian Digital Dollar, Aberdeen, BlackRock's fund, Legal & General. I think they're the largest financial company in the UK, so on and so forth, and more will pop up. I honestly believe that Hedera Hashgraph, and this is the opportunity here, is one of the best positioned pieces of technology to essentially induce this financial revolution and upgrade and unlock that is going to take place on this technology. Hedera is there. And despite some, if we dive over to the lackluster price action, this is still following what we set out for it. We've been accumulating throughout this time period here, along with you guys. You guys have been following me. We had the 800% rally. We've pulled back into what was prior phase 1 resistance, now flipped into support. You do see continuation eventually, and actually you might be setting up a continuation pattern that would see this come to fruition. But I'm very confident that Hedera is going to the upside. Not financial advice, just my own opinion. Always make your own minds up. Crypto's risky. You can lose all your money. We don't we don't give financial advice, but one bit of financial advice I will give people is not to leverage trade crypto. You will lose all your money. Most likely, that's the most likely scenario. I'm an investor in crypto. I'm an investor in technologies that I think are fundamentally impactful. And I think when you talk about a fundamentally impactful technology, Hedera really is that, certainly in regards to the markets and the quadrillions of dollars that is within them. That's it from me, guys. I'm going to love and leave you. I look forward to seeing you all in the next video. Thanks for watching, guys. See you soon.